Even when Genting share prices go up, Genting got earn money one meh? Hello, what's up people? It's Evan here again. So, my job is to actually simplify finance and investment for you. So remember to hit the like, share and subscribe button to let more people know about us. The question just now was a very common question that a lot of my friends will actually ask me when they start investing. They were wondering, will the company actually make money when the share prices of the company itself goes up? But before we dive into the real topic today, let us venture a little bit into what are stocks actually. Just let me give you a very simple example. Just imagine 3 of your friends and you actually decided to open up a burger store, right? And each of you actually fork out 1,000 ringgit Malaysia to actually start up this burger store. So by calculation, each of you has 25% of the ownership for this burger store. So after 1 or 2 years of business operation and you guys are getting, kind of a good business and kind of good sales, then you guys decided to actually expand your business to somewhere else. But because of starting a business at another place, you might need to fork out cash another time because you might need to rent the building, you might need to buy some equipment and some materials for your business. But then you guys do not want to fork out another 1,000 ringgit for this business. So what you guys can do, you guys can actually raise fund by listing out your company shares to potential investor, let them fund you to open up your new business. So what do the investor actually get? They get an offer of the ownership for your burger store. So the theory is rather simple. Just imagine you and the investor. The investor gives you money for you to continue your business, and in return you will give the investor some of the ownership, right? So that they can enjoy the benefit or the dividend in the future later. So let us get back to the real question. Does the company actually makes money when the share prices go up? The answer is no. If you understand the concept that I have actually presented earlier, you will know that if the share prices go up, only the shareholders of the company will make the money, but not the business itself. Let's go back to the burger store example. Let's say, after another year, your business are actually doing really good, and you'll still keep on increasing. So there are more potential investors that are actually willing to invest in you and let you open up more stores, let's say in KL area, alright? But then of course, the same thing, you and your friends do not want to actually fork out money to do more business expansion. Because of the increasing in sales and also customers, your company now become very worthwhile for potential investors to come in. So now, before this, you were actually selling 1 ringgit per share to this investor, but then now there are more investors willing to offer you 1 ringgit 50 cent per share. So in return, the share actually raises from 1 ringgit per share into 1 ringgit 50 cent per share. So if you do the calculation, you actually get a 50 cent differences in the share value itself. Therefore, the one who makes money when the share prices increases is the shareholders of the company, because they can sell their shares in a higher price to other investors as compared to the price they bought in. So they will make a capital gain out from the shares itself. So I know you guys might be wondering then why the company wants their share prices to go up. So at here, I'll actually share out 3 reasons why the company wants to do so. Firstly, they would like to attract more investors coming in to buy up their shares. The more investors coming in, the higher demand for their shares. The higher demand for the shares means that they can get more funds in order to actually expand their business. Secondly, a higher share price actually indicates the company's performance. Because of the higher share price, most investors will think that this company is actually doing good in terms of their performance and their sales and their business. So they will offer more funds in terms to expand the business for itself. Thirdly, a higher share prices actually reduce the risk of takeover. Just imagine if your business is doing very lousy, and there's another big business or big company coming in to eliminate you as their competitor. They will actually buy up your company in a very low price and you will lose your business. So if the share prices is high enough, the companies will not want to risk a lot of funds or a lot of money buying up your company. So in return, you yourself actually reduce the potential risk of takeover for your company. In a conclusion, the company itself doesn't make money when the share prices go up. Only the shareholders makes money when the share prices go up. So this will be the video today. I'll see you guys in the next video soon. Thank you.